Good morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and here we are at 7 a.m. Canada time, looking at December the 5th. Is it the 5th today? No, it's December 6th today, sorry. December 6th for the NASDAQ. We're here on the 30-second chart. I had this marked out here, 16031 on the 15-minute chart. We'll see a price right there on the bottom of this down close candle, right there. That one is, its low is 116,030.75. So I was looking for that little breaker to hold price, come back into this gap that we had here, new week opening gap. I think Derek was saying. So get back down to the 30-second chart. We might be seeing a turn point here, right off that line. So the question is, are you going to go short at this point? And while I check it to make sure that they were up and running live on YouTube, and yes, we are. There we go. All right, we're good. So we hit that bang on the money there. That's what we're looking for now. We're looking for a point where it's now the 9 o'clock high, looking for silver bullet entry. I think we just missed it for the 9 o'clock. Look at this right here. Right there's your silver bullet entry for a short. I think I just missed it on that 30 seconds there. So we'll see if it comes back up and revisits this, or that little imbalance sitting right there on the 30-second chart. Can't believe we're actually looking at a 30-second chart to trade now. There you go. There's the imbalance. Oof. Don't lose that. Yeah, we get below these lows now. We have no breaking structure yet. Even though that was sitting right there, silver bullet, or this guy. We still may be pushing for highs. It's non-farm payroll week, folks. And when you're in non-farm payroll, not for professionals. Now, Michael says usually if you get in trades and stuff, you want to have them out by Thursday, and then you want to wait for Friday's event to happen, and then get ready for your next week. So we're coming into this little multiple area here. That order blocks threshold has been hit. I'm not a big fan of a 3 PDRA drive. I get suspicious of those, so we have nothing that really breaks structure. I'd like to see us get down below this fair value gap here. Use it as support first before starting to head down. further. But I guess if you're looking at your 9 o'clock, there's your 9:05 silver bullet. Now those of you who are brave enough to actually get in that, I hope you're about to get a nice little run here. Look for another so we have that 1 hour breaker right up here. So that may be the place we're running for again, and then the midpoint of that breaker to clean out these old highs and then return down for a lower prices. There's still quite a lot of get rid of this over here. So we hit the edge of this candle here. Rejection blocks. Yeah, I don't think this is done going up. We're sitting right on top of that fair value gap now. On the 15-minute, see how we're just kind of banging off the top of it? I didn't like that 3-hit PDRA. One run through, 3 of them at one time. And now we're kind of sideways, so equal highs, look at that. They're not going to leave that untouched somehow. Got this area here. .75% retracement puts you right on a fill of that fair value gap. 70% puts you inside. 62% puts you right at the open. So there's some nice perfect overlap in PD arrays inside this little range. Swing high, low, swing high. So look in here. A wick below a swing point is not my idea of a bold breaking structure. You get a wick down, it's usually just a run on stops. That's not to say that it won't come down, but this would be a run on stops here, so next guess would be run on stops above the high and your rejection block. We just come back in to fill this little fair value gap SIBI here. And now you're looking for a run above these highs. There's the run. Alright, so now it's got to pick a direction. Either keep going up, start coming back into here. Good morning, Adam. How you doing today? What do we got here? As first consideration, DC has decided after much analysis and soul searching that I should get my finger on the buy button and off the sell button. Yes. Not surprised to see it waffle around the inside of the week opening gap. Yes. Unhand that button. This little run up this morning at 8:30. You look at the 15-minute chart, I think it was. Right here, see consolidation. We ran up. As soon as we break this consolidation with a bull candle, we came back, we tagged the top, and then left. 5-minute. It seems a little more clear on the 5-minute. We get a swing point. There's a breaker right here. We trade up above it. We came back down, hit it perfectly right there. Left the whole zone. Then look at this order block. We get above it, come back into it. And that's when you start working on that 15-minute fair value gap. And then when you saw the 1-minute fair value gap, when it ran that high and started coming back down again, as soon as it starts clearing this body here, you go, wait a second, that ain't done. It comes back, finds support right at the inversion fair value gap again, and then starts off. That's when I was going, you know, you got the further upside. As soon as that broke right there with a body and comes back, finds support at it, it's like, no, there's more upside there. It's kind of like what you want to see on the side. If you want to see this is getting down, you want to see a candle get below that with a nice firm body, come back up, hit it, drive through this one. As soon as we break this low, we get those distinctive patterns that we're returning back down, breaking in market structure, consolidation. Another one is break consolidation, run down with a fair value gap, create a fair value gap there, SIBI, come back, trade inside it or just to the bottom of the consolidation, and then continue down. So there's like several different entries we can look at here to get into. Mr. T. Mr. T, good morning. How are you, sir? So that was the high, still playing out nicely. Let's look at the 30 seconds. You want to see it get through here now. They ran those highs. To make them look like nice candles here. So that's your return to the bottom of the fair value gap. Bodies. Fair value gap busy. All these little price imbalances. %, if they go through 50% of that range, that's we'll see that candle ends. Nope, there's more upside. Aha, Judas, run, clear the 9 o'clock. So I'm thinking. Okay, I was going to say, I'm thinking if we take this out here, the 10 o'clock takes that out, and we get up, we're going to get our return back into the range at 10. Once 10 makes its lunge up and clean out these highs before 10 o'clock, then the return back in, and we should get a rather decent return range after 10 o'clock. What say you guys? I want higher prices low to the low of the day made to me. So as we were talking about back here on the 1 minute, I think it was, you want if you have a consolidation, you want a big bold candle down that breaks below here, creates a fair value, comes back in, and then you get a short. So this was just another stop run. Now I've cleaned this all out here, so we've come back up to that breaker on the 15-minute again, and now we're working through it. So there's your higher time frame. Breaker goal. We eat through the 15-minute one. Now we're heading for this guy here again. We've hit it once, so we have the mean threshold next. What was this price sitting up here? Oh, you boys remember this old price, don't you? Do you guys remember this price? Hi, Dolfo. Ooh, Dolfo. I tell you something. Derek's gonna like you because you take those letters in your name and you turn them into golf, and he'll like you. That sounds very close to golf. Golfo. Derek will be all over that. Our professional golfer. Welcome. What part of the world are you in, Dolfo? consolidation. Now we break above it, come back in, find some support at that. We might start seeing a little higher prices. Equal highs. A little fair value gap down here. Just tap those equal highs and then pull off. Now you want to see lift above this candle, obviously. Continue up. But that's the other entry, right? That's the impulse candle above a consolidation. Kind of like what I was describing down here. So if you have the impulse candle down, creates a fair value gap. Now, this is a reprice rebalance. We come back into the midpoint or touch the top of it. We have an impulse candle getting away from that. Tag it. And we start to leave. So if you're a super scalper, there's your first objective. And it will be 5 handles. If you're one of those dine and dash kind of people, that's your entry. There's your first exit. This is now a valid order block. Tag it, and away you go. There you go. You just saw a nice little entry right there. Just for 5 quick little handles. He's a spy. Dolfo's a spy? Is he? Are you a spy? Oh no, Matt and Mr. T is the sort of like Adolfo. Oh, it could be Italian. Adolfo. So we're still looking for this guy up here now. So if you've got if you did get in on that one for a run up, then you're looking for your next objective would be the bottom of that fair value gap, which is the equal high on the other side we're looking at on the hourly. Like if I pull back to the hourly here, you'll get an idea of what I'm talking about. Well, that's 15 minute. Stand by. There's the 1 hour that we're looking for. So rejection block first. We're just about to hit the rejection block. Then you got the hourly high breaker. So that's your next objective for your if you're gonna start bailing out of that. Where am I at here? Okay, this is the one. And 50% of that range, if it decides to come back in there again. Will be a fill of that fair value gap if this drives all the way back in here. If you lose that again, then like we had on the other side here, we rode through the 50% of it. Not a good one. This is why if you're a super scalper, you pay yourself up there. We get back into the imbalances here. You just tapped into that. You want to see that stay open now. That little piece right there, you want to see that stay open. There's one more opportunity for those of you who wanted to get on that consolidation. That order block there is now valid. So if you're a super scalper, this is what I mean by super scalping. If you're in on these fair value gap returns, look at the order blocks. First point of exit, second, third, like 10%, 20, 30 perhaps, 40%, leave at least 60% of your trade on for higher prices. And there you go. You would have had 40% of your trade off right there. Now if it blows right through you, you would have been like, dang. Like that. You would have taken your stop loss right there. And you would have had 40% of your trade off right there. You're Spanish. Ooh. Oh yeah, I guess that would be Adolfo. Not Italian. My apologies, buddy. Spanish. I love it. Conquistador. Oh, look at that. Welcome to your 9:30 open. If you were super sniping, you'd be smiling your little smile if you would have done the exits accordingly. All right, so now we've got some, this is what you want to see, a nice little impulse leg like this. Just don't come all the way back down too soon, my friends. Give us a chance to get on here. So you want to get on this breaker here. Or not. I'm going to have to go to a bigger chart here just to try and catch up on this candle. So return to this old highs here. Bodies highs. These are all like little breakers. That's a breaker, broke below that low. That's not a breaker. Well, I guess it would be. Right there's your swing. So it's just coming back to these, hit them back into this order block. Inversions now. So we've got this inversion fair value gap here, an inversion here, and we have a 15-minute fair value gap is now an inversion as well. So we've got here this little cluster here. So there's lots of little places, and we got that little breaker on the 1 minute right here. So this is the stuff we were talking about earlier, about we want to see that big impulse leg fair value gap created. We want to come back into this breaker here, leave that open, and then continue down. Now is this that was off the rejection block, was it not? On the 1 hour? Yes, look at that, right off the rejection block. Bingo. That's the thing you gotta watch, is rejection blocks are far more often hit and the highs don't get taken out. You see it, I see it so regularly. So regularly. So kind of keep that in mind when you're looking at, if you're going to scale out somewhere, look at the rejection block as a first opportunity, and then if you get the wick, great. If not, because a lot of times it'll just come into the wick, take 25% of it, show weakness, and pull away. But the rejection block is a great place to unload a position too. Back to this order block here. inside that inversion fair value gap. Blow through. Now I want to see, I still want to see it come back, give us something to get on. Is there a 30-second? Body gets through it. Right. That's pretty much a little tiny piece gets through it. Come back tag inside the fair value gap. And leaves. Yeah. I wouldn't have seen it. It would have been really delicate, but right back if you look at the 50. This is the interesting part about that 50% of that range I was mentioning to you guys earlier, which is right there. That's the high of the range, bottom of the range. Okay, so it didn't quite hit 50% on the 30-second chart, but it did come inside that inversion fair value gap there, and the top of the high of the 15-minute before exiting. Okay, things to learn. Note. I want to see a nice big run back up into here. And don't forget, 10 o'clock, we can still take these highs out and aim for this up here for 10 o'clock. And then when that breaker's hit, if we hit the midpoint of that breaker, which is my eyes right here for, I'll even put one of those little goofy eyeballs there. One of these guys. Look for that midpoint there. So that would clear out the high that is created here. 10 o'clock takes out the high and hits the mean threshold of the breaker over there on the hourly for a run back down. Like this is just like a Judas swing, perhaps. Perhaps. I'm just spitballing ideas. Yes, I agree with you, Dolfo. It does. Yeah, I want an open for sure. What are we coming back for here? Let me look in the 15-minute chart. Okay. Fair value gap. Fill. Order block. Breaker. These two will be a 30-minute breaker right here. So look for some resistance off of here. Okay, so now we're into the breaker. That would be the very last one would be here. Inversion fair value gap. Look right here. We're into that inversion now. If we lose this, then you've got a good break in structure now. But that's that's way too tasty to leave untouched. If we close this hour candle below the London low, would you think the draw would be weekly low? If we take out the London low, so this is the regular trading hours gap that we're coming into here. So if we take out the London, if we take this breaker out here with a big bold candle and come back into it, then yeah, I think we're starting to head back down. But we have to break market structure with a big bold candle here. But I think all we're doing is just coming into that breaker. If this little sucker holds and we start to see a slow retracement back up, my eye goes back up here again to those equal highs. And this high is 15,936, and the low so far is 15,936. So we've already hit this guy here. So are we going to continue to get a reaction off of that? Right there, you see that? That's the reaction we're talking about. Like right on the money. So now if we start to pull back into here, my eyes go back up here. And if you've got cojones, then retracement all the way back to a discount array inside an array that was created since 9 or 7 o'clock. So yes, yeah, if we take out this local low here, the London low's taken. If we look from further back, like what do we got over here? We've got this gap over here. See how we finally cleaned up this gap, regular trading hours gap from 2 days ago? We took that out, cleaned that up, just ran it out, and we also cleaned out some liquidity on the 15-minute. But oh, yeah, do you remember this, Derek? Do you remember that lucky number 16055.75? Do you remember our discussion about that one a few days ago? I think it was just you and I sitting here at the end of the day looking, going, there's that little puppy right there. Is it going to revisit it? Well, that's the guy to look for now. If we start breaking this high here, you can find that number. Oh, and it was 60,055. Let me move that guy over a little closer to us here. So we got oops. Sorry, as I jump around my screen here. 60,055. Right there. All right. I'll let you guys try and figure out what it is we're talking about in terms of 60,055. Why is that such a significant number? You can post it on the side there if you want. Tell me why you think that is such an important number. Not that we're going there, but if we do, start eating our way through this open, and that breaker holds, and that 60055 also coincides with that breaker we talked about. But notice it's not the midpoint of this or the mean threshold of that breaker. It is now something different. It is 25% of that breaker, but one area over here supports that price. Coming back to revisit this. So remember, you got 3 different PD arrays inside this breaker now. With the high we've hit, the open, and the mean threshold. So people who go long from there, stop loss there, super tight stop loss if you're wrong, and that breaker gets taken out, and then you know you're on the, you can get on the right side of that if we have a big bull candle that rips through you. Consolidation. Ooh, let me play here, stand by. This, from this moment forward, will be known as the line in the sand. The line in the sand. Nobody took on the old what does 16055 mean? Oh, look at this delicious little bear flag happening for retail people. Well, we got another 12 minutes. Let's look at what Dolfo's talking about here. 111. The Dow is the stronger of the three, I guess, right now. Off the open, Dow is the stronger one. It's taken out its highs. And it has already blown through yesterday, 2 days ago's Monday's open. So has E-mini S&P and 1, 2, 3. Well, I guess they all have. That's taken out. This guy's taken out highs, high, taking out equal highs. This is back to its order block with a fair value gap. A little small consolidation, ran above it, come back. So that would be a strong response. This one's dug all the way through it. So if it takes out its low, definitely the sick one of the bunch. This guy here is holding that off that order block here. So if this holds, it's open, because they're both above their open, and Nasdaq's below its open already. See, Dow ran up and just ran out these equal highs here, and smartly pulling back into the range. These guys are not making a run on those old highs. This one seems to be the weaker one of all of this in terms of running for its highs. Higher high, higher high. Lori, buddy, how's it going? You're looking for a long in ES off that order block. Get back up into that daily fair value gap up there. Run these highs out finally. We'll see what 10 o'clock brings around. You can see just a sudden rip all the way back up in here. This is what we're looking at earlier on Nasdaq. There's this ripping up. That's our line of ascent. So if we spike down, run up, I don't know. I'm just playing with ideas here now. Got another consolidation. Body breaks above. Fair value gap. Let's look at ES for a similar. A lot cleaner. Hey, so they're not way down in deep in like difference with Nasdaq. Sorry, Nasdaq here. As we're deep into this consolidation already, we're right near the consolidation, whereas ES, we're not even near that yet. So we're still inside this fair value gap here. But we do have a big regular trading hours gap. We're in the mean threshold, or consequent encroachment, I should say, of that large regular trading hours gap. So we could go either way, right? We could run that back down here, clean this out, close that gap, run back up, vice versa. How do you think CAD rate announcement will affect NQ and ES? I have no idea. I'd be bullshitting you if I knew. I have no idea how the CAD's going to affect either one of those markets, because I know if you look at oil, remember I was calling for oil at 70. Oh, look, let me get back to my old MT5 chart here and look for, I have oil. Remember when I put oil down here at a price, where the hell's my oil? Tech, NASDAQ, yeah, over there. Look at that, 70.55. I call it, it's right on the money. I've been calling this sucker down for weeks. That's the one I called just last week for that price right there, and it's just hitting it. There's something satisfying about that. So anyway, oil prices, if it affects the rate, affects oil and CAD, we're back to this original consolidation, equal lows down here. So if this does not hold price right now at 77.5, then I'm looking at this breaker here, and if that one doesn't hold price, then we're running for these old lows down here. So usually if this is a market maker sell profile, smart money reversal, low risk sell, accumulation distribution, you get your second level of accumulation distribution again. Now there's your big run down into original consolidation and potentially taking out these triple lows here for oil. So back to your CAD idea. How will that affect the markets? I don't know. Let's see. let's wait and see. Yeah, it's something to put in the old journal, trade journal. If look at all this whipsaw action here on the daily. We just came back up into that hourly fair value gap. There's an hourly fair value gap in there, I guess. We hit the mean threshold of that. Pulled away. So now we're going to take another little big run up and stab into these rejection blocks. Wick. Wick. I don't know, let's get back in there. If you guys see something on one of the other charts that you think is one to reach for, let me know. I like this over here. Keep your eye on that imbalance, that little price imbalance here. Let's go back to our regularly scheduled program. We're still staying off the bottom of the top of that 5-minute breaker. 5-minute breaker, run up. We've come back to the top of it. Now we're having a reaction off of it. We're just kind of bouncing around, but it is a holding price right now presently. And we've got 2 more minutes, and let's look at CAD on the 1 minute and see how that price is going to affect us. So we got fair value gaps up here, equal highs. 15-minute, what do we got here? Yeesh. That's a freaking mess. We have this BISI down here. If we take this one out here, look for this one down here. I don't know. I can't even give you a decent read on that for a news event. Look for this thing here to hold price. Here, it just opened up now. spike up to the bottoms. Run down into here maybe. Coming off this order block. Mean threshold next. So you're really between this guy here and that guy there. Which one of those guys give up the ghost? And did that really affect the Nasdaq when that popped? It ran right down to that 50% that we had marked off there. What did it do to oil? Nothing major yet. CAD. Nasdaq. Why have I got 3 Nasdaqs here? Ah, now we're looking for a low. We may not get this now. Finishing that gap off. Then we'll see if it starts to reverse. Just to sweep these lows, complete the gap. Get rid of this guy now. Now you want to see, we run those lows. Yeah, if Nasdaq takes the low, it just took the low. What is that doing for E-mini S&P? E-mini's coming right back in and filling that fair value gap, busy on the hourly. Dow Jones is coming back into its consolidation. And Nasdaq's just taking its low. So, low, this is closing through its low now. So this is, I wouldn't say it's bullish anymore. You're eating through this order block and we're closing, depends, I mean, that could have been just a little, let's have a look at this. Let's go in here and see what's going on. 1 hour. Remove this thing here. So we've dug into the mean threshold, consequent encroachment of that busy. We've tapped it multiple times. We're on the high. We're inside this overall breaker here, last up close candle before running below these lows. So you want to see this hold price if you want to keep going bullish. Or it can dig all the way back into here, hit this order block. I wouldn't want to lose the threshold, the mean threshold of that order block there if you want to stay bullish. You want this to hold price here and get back up through the New York Open. That's the 1 hour. Let's look at the 1 minute. That's that 1 hour. We still have that gap created in the regular trading hours. We're through the 50% of it now, so there's your consolidation. Return back up to the bottom of that consolidation. We could get continuation on the downside. You want to see this consolidation get blown through on the opposite side there. Otherwise, this is your SIBI, or is it your silver bullet entry for a short, not a long. At least that's what I'm seeing. I could be wrong. Remember, I'm not a pro here. I'm just kicking at it just like you guys are. So we're really between this consolidation and that 1 hour fair value gap. So we said it could potentially run back down there. Well, there's your silver bullet entry for a short back into the, which we consider reasonable, run back down into this fair value gap, which is that order block on the hourly. And that will give you, from that entry there, 86 down to here is, that's still 8 handles on S&P. That's a nice little run. Obviously scaling out at the midpoint and the low, or below that low. Just keep taking 10% out if you can. Yeah. So if that ran right up into that and filled that, right back to the bodies, that'd be a nice little silver bullet with your stop loss going above. But if you guys are long and that is providing support, here's your alternate narrative, just so I can kind of get in your head here. That's the fill. So if this did provide support for a long, then we need to see it blow right through here and ignore this as initial silver bullet entry. And you want to see it drive right through if that provided support. So if you're stuck between is this long or is this short for a silver bullet entry short back into that hourly fair value gap, then your answer is don't touch it. Because if you're confused as to which direction you think it might go, don't touch it. Wait for a more solid entry. And the fact that it's digging through that right now and closed above it, I would say is more bullish than bearish. So those of you who are saying, I'm going long. Adam in a long, yes, okay, see, Adam went long. He found support off that. Good stuff. So we're eating through this thing now. The fact that we blew through this with that one candle, came back, tagged it. I didn't really tag that inversion. But the moment it blows through it, stops, now it becomes inversion. Now look at this candle here. You want to see a big bold candle get up, come back, find some support of that, and continue on the upside. So what's our NASDAQ doing? Are we getting the same kind of reaction off of NASDAQ? So look for this candle right here to provide support now. We closed on the high, opened, dipped, and kept going. Equal highs. I'm going to move to the NASDAQ now, but look for this to provide support. You want to see that stay open, but if it does come back into the same range, did we run the highs there? No, they're relative equal highs. But we ran the high out here. Is that all it needs to come back down? I don't know. I can argue both sides of this. But you want this to provide some support now. Or at the very least, you want this to stay open. At least half of it. So if you come back to this candle's low, you're inside this one. That's your support. You want to see it leave here now. Okay, good. So that's leaving. So let's go over to NASDAQ. Sorry, I'm bouncing around here. I want to see if there's anything in here that we can get a hold of. Same kind of principle here, right? Fair value gap here. Definitely the weaker. I like the ES over this one. Tag it one more time. Get out of Dodge now. There's the top. You just got to work those highs. You don't want to lose. If you added those two together, that would be a 2-minute breaker. I don't know if that's an open close. Open. 88 is the same one, flat candle. So you want to see this go now. Like I say, you can still get a dip down into this candle's low. Just pop into here, leave that open, and run up. But in order for it to be super strong, I like to see that stay open. All of this little piece stay open and just start running up now. It is messy. Messy, messy, messy. Lionel Messi. 9. 13. We might get the in about 4 minutes. We may see a run down into here. Way too choppy for me, man. Partial 45.91. You're taking a partial 45.91? That's a smart move, I think. I think that's a smart move. And then are you moving to break even after that? My 45.84. You're in at 45.84. Oh yeah, then move to break. As soon as you take that high out, move your stop loss at least to break even. There's 45.90. You're just 0.25 short. Come on, give Adam his money. There you go. Oh, you want the 5. There you go, Adam. There's a 0.25. Another 0.25 and you'll get it now. Broke above order block. Now you look one over here. There you go. You got it. Wow, that order block with that little breaker sure got his ass worked there. Right to the very last pippy. So we did get the support we're looking for a run back up there. You got your partial. Good for you, Adam. Derek got his, or Laura, you got your long on that as well? I hope you got that really good down here too, right off that 15-minute fair value gap, or 1 hour fair value gap, finding support there. Now that we're above this consolidation, now I'd like to see a little run for the AM highs there. What is the NASDAQ up to? Ran the lows. Come back to the breaker, reverse here. It's giving us the same thing, but way more lackluster than the ES for sure. See how that's already broken through this consolidation. ES has already blown through that already. Finding support, much more stable. 45.84 is a 15-minute order block. That right yeah, got in on. You got in 15-minute. Yeah, this is 15. Is it a 15-minute? Oh, off this guy here, off the breaker. Yeah. There's a 15-minute breaker right there. Lovely. Now look at that one. So breaker to breaker. 45.95. 45.95. 45.96. One minute. 17. Premium discount from 50%. We do have a fair value gap down here. If you're going to get long, Fair value gap fill, 79% retracement with that small range there. So we have the rest of the gap to fill. I could argue both sides of this now. You've got this last down close candle here, the lowest down close candle. Body, we just hit it. Now you're working your way through it. The fact that we ate through this thing with a body, with a wick. This may be the... Nope, that's definitely going through. I'm short NQ. He's short on NASDAQ. Okay, let's have a look at that one. They ran the highs. That little island reversal there. Came back, tagged it. Short. That's a good one, Lauriston. I like that. Now you hope you're taking something out of here. Pay the trader. Do what you want, but that's a pay the trader moment for me. Back into the breaker. That's a good short right there. Body up below, short right there off of that breaker. Nice. Good job, buddy. Good call. And there was a last opportunity to get on there. If anybody wanted to get on that one, that was right there. That's your opportunity. That was a silver bullet. That's that thing. Those of you who haven't been in here yet, I know I've got 8 people in here, so then probably somebody hasn't heard this yet, but I'm not a big fan of those first early silver bullets from 10 to 10:15, 10:12 area. After 10:12, that's usually where you get the wick. If you're looking at the power of 3, your wick up, and then the body is, you want to get the body on the way down. So the first 15 minutes, 10 to 15 minutes is the wick for me. So usually the fair value gap you cash after that, unless of course it's something blatantly obvious, like you've just ran out a high or a low and you're coming back into a fair value gap silver bullet. There obviously are times when that silver bullet works great right after 10 o'clock. But just for your own observations, look at after 10 minutes after the hour. Look for the next silver bullet entry. So here's your 15 reversal. You take out that high. So even if you did take this one and you were wrong and it came on the opposite side and you saw this one set up, that's the short right there, right at the wick of the hour. Another rundown. The gap's finally finished. But we were looking for a return north on that one. Still didn't get it. That's okay. You had something that said, we break the high, impulse leg down, come back up inside. No, didn't even hit that guy there. Good one, Laurie. Where are you headed, though? Where are you headed? Yesterday's PM session. Run that low, run that low. Are you scaling out on the way down, or are you just you got a downside objective like yesterday's gap. You closed it out. Oh, good man. You got some good objectives there. I like it. Well done, buddy. Well done. All right, so what do we got here? So 1 minute. Can we get off this breaker right here? Actually, this would be the breaker here. This last down close candle. The body is a little deeper than that body. These guys are hiding inside this guy. So this, if you could get a return to inside here or inside that, a revisit of this fair value gap for a short, if we've taken that out. If we lose that guy and we lose the high of this, then look for these equal highs again. New week opening gap at 15.893 and 15.874. $15.893 and 15.874. Yeah, that's right at the bottom of that new week opening gap. Will it go from one to the other? 893. That was your entry, Adam. Plus 24 ticks. All good stuff. I got you. Excellent. Good for you, buddy. Excellent work, Adam. I love them. These are really good. You got some great entries, you guys. Still in the loop evaluation. Can't make too much on the account. Yeah. I totally missed it. Yesterday I didn't close it out. I was right on the pass and now I'm down like, I still got another $1,000 to go now. Finished trade for today. I close out my charts. I tend to give the markets back my profits when the charts are open. Really good traders in the family. I like it. Yes, well. So you're out for the day then, Lori? Good for you, buddy. You made some money. Close up shop. So here's the breaker. That's good. Now you react off that. Now continue driving down. I want to see that thing provide some support here. Yeah, this might be a short right here on NASDAQ. Inside this breaker inside a fair value gap. How lovely is that? Wrong one. I don't want to see it get below this fair value gap here. I should really start picking up the pace. I don't like seeing it waffling around here. Too much waffling. If it comes back down here, I'll get out. Yeah, I don't like all this side-to-side motion stuff. It's sitting right at 50% too, so like, come on, make up your mind. Let me get out of here. So I'll wait for a new setup to happen. They're revisiting the top of that fair value gap SIBI, which is working the whole inside of that SIBI right now until it makes up its mind where it wants to go. I'm out there. Body broke the high, so chances are that's an upside run, so I'll take the small loss there. See that fair value gap there now becomes an inversion. Came back, tagged it, leave. So that's my rule is if I break that high, doesn't matter if it comes back on me now. The rule is that if it breaks the high with a body, I'm out. And that broke the high with a body. My stop loss was sitting up here, so chances are it's going to take me out. So usually if you see it take that out, you try to catch that one more little dip down into it so you can close it out. Take a little piece out, cut down the last little bit of loss. You're hoping a wick will form there, back off that high, and you can get just a tiny piece back out of it, because if you're on the wrong side of it, then that's what I look for anyway. Usually when you see this return into here and that reaction, the next candle should have been like continue down. So the fact that I usually like to wait 3 candles, you get 1, 2, 3, 4, 5, 6, 7, 8, 9 candles before I finally got out. The 3 candle rule. If it's not making a move within 3 candles, then chances are it's not as strong as I'd hoped. Yeah, 1 minute is a bit of a challenge, eh? So we're inside this order block here. Now watch it roll over and come back down off that order block, which is 62% of that range, I think, from a Mr. Little Fibonacci. And you see me, I love Fibonacci stuff. 62%. Boom. On the body. On the freaking body. And my stop loss was just above there, so I would have been really tight squeeze. Whatever. Once again, close out my stop losses manually instead of just trusting it. Oh well. I made a little bit on my prop firm piece. I'm trying to make back a little bit of what I lost yesterday. So I made 25% back of what I lost yesterday. I happened to catch that high right there on my prop, and I got out down here somewhere. Just because I wanted to get, I think it was around here, I got out for like 20 bucks, 25 bucks or something like that. I got a very small prop firm thing. It's like $5,000. So you're not allowed to get more than 500 bucks as a loss, or 200 bucks on a day. So you got to keep it tight. So 25 bucks is a big win for me. All right, and we're back into the consolidation again. Oh, you go to 5-second chart for confirmation? Yeah, that's a smart move. So we broke above, came back inside. Now you want to see it finally bust out. Come back, tag it one more time. Or this old high order block. Yeah, I can still come back and tag the high. He's not a wick. They just ran the highs out there. That would have ran my stop pretty close. That would have almost taken out my stop. Too much messy side stuff. Close above 5-minute fair value gap, and I think we take those local highs. If we get above here, yeah, if we close above that, come back and find support at it, I agree. We might be running for these quick little short-term highs here, back into this fair value gap, because if you look at that range, good call, Dolfo. 50%, 62% puts you right back near this fair value gap here. So there's your fair value gap fill. Boom, good for you. All right, Rodolfo, now you go down to a 1 minute and see what you get in here for support. So that is 9395. 9395. So at the top of this here. Right there. That's the call we were making earlier. Come back to here. Tap right there. Good. Now leave. Leave town, my friend. Leave town. Right on the money there. Open, close. You can go long on that. I'm with you, Rodolfo. Rodolfo. And the stop loss I will put right down in here. Right at the bottom of that fair value gap again. And we'll put this take profit up at there for now until I figure out in the 5 minute where we want to go. We just want to get here. We want to get a body above that candle, not a wick. Stop loss is right at the gap. We've worked the gap multiple times. I'm not going in anything out. This is just demo here. Giving that a try right off this inversion here now. And I'm just below the inversion. If I'm wrong, I want this inversion fair value gap to hold price on the 1 minute. Talk about flat. Holy doodle. I haven't had my coffee this morning. I'm going to go grab a coffee and let that sit and see what happens. See if it percolates.
I was expecting to come back and you guys had done some work for me and push that price up. Come on. Nothing? Nothing? The bodies are respecting that now. Yeah, choppiness sucks, man. I like your idea on the 5-minute one as well. This 1 minute one is the one I'm kind of gambling on to hold price. So we'll see if that was it down $200 in the last one, right? Can we make back my money there? Now I don't want to see this get revisited again. We're above that order block now. This order block here. Oh, that's not good. Ooh, looks like I might have my finger in the door. Come back and revisit that regular trading hour low. That'd be it for me for the rest of the week. I'm not even doing demo. I just managed to snag back some money on my prop firm challenge, but this demo one's not doing so well. We're into the middle of that again. Dolfo, you may have the right idea, man. Wait for the big 5-minute run. So now we got this damn candle here you want to get through. Otherwise we're just stuck between these two now. Okay, so this is, where did I get in? Somewhere in here. 1, 2, 3. I'm going to do that 9 candle thing and lose some money first. Okay, as soon as it comes back to break even, I'm out. There, I'm up $5. I got out. Too much waffling. Make back the commission, get out with my tail between my legs. I was kind of hoping that this inversion, it still could hold. We haven't broken it yet, but I was hoping for a more robust kind of roll off there. Not that I was expecting that after all this little choppy chop that it was suddenly going to do that. But I'm going to put this here just so we can see the let's get rid of this. In my mind, I'm still short on NASDAQ. I think these equal highs, I don't think they're going to leave those untouched. You may be right. I think, you know, NASDAQ may be reaching for that. Lower prices. But I don't think they're going to leave this untouched first. We're sitting at 1030. Between the 930 and the 1030 now, hey? See, as soon as I get out, Derek, you should have been in on that one. I just got out. That's when it goes up. Too squirrely for me. Yeah, I agree. I agree, my friend. I agree. Well, that just went into cheese grater. They're not done inside that fair value gap. Holy smokes. We're through, you know, I guess if you look at this 2-minute or 3-minute breaker, we're still inside that guy. So I guess if you drew that out as a breaker, you're still inside it to go short. So I could see where you're, and we're inside this inversion fair value gap there, all the way through. The bodies of the candles are respecting that. Okay, that was just creeping through it. Mean threshold. That mean threshold is hitting price. Then it flipped over and hit it from the top. So we hit it from the bottom, hit it from the top. Now you want to see this actually hold price here now. Equal highs. And that breaker right here. That 3-minute breaker right there. So really we had just a wick. We've worked that whole regular trading hour gap. We wicked through it, now we're back inside it again. Out of curiosity, what if we did this? $25 to 50%, work. 0 to 25%, work. No work's been done above 50 to 75%. Unless, yeah. So we've been working the bottom half of that. So if we do decide to run up, clean up that 50% and then start moving above and work the 75% of that range, of that gap. See if we can't get on top of this 25% area here. Is there anything else happening somewhere else where the paint is drying a little faster than this? That's NASDAQ. What have I got? 2 NASDAQs. Lower low. From here, though, okay, off this order block here, we've had a revisit 1. This is the first revisit on ES&P. 1, 2 visits on Dow. 1 and blast through it on NASDAQ. So if we're looking at this order block here, we hit it and dug into the high, the open of it here, revisited it here, and we're pulling away. This one here, this is the first time we've revisited the high, not the body, and now we're getting back into the range. So E-mini S&P is the stronger one of all of these that I can see, just based on that there. What say you guys? Yeah, consolidation's at equilibrium. Nothing says I can't make up my mind like an equilibrium consolidation. See, now this really supports Laurie's idea of the short. Now that we've come back into this down close candle, ran up, cleared these old highs out, that makes this the breaker, and we've come back up, we've hit the breaker edge right here, and now we're pulling away, we're kind of bouncing around back and forth. That's the 1 hour. 15 minute, we come back all the way through it, tagged it. I can see why you want to, you still think short on this Lori. Makes sense. It certainly does make sense, for sure. On the higher time frames, short, I think, is the way to go. See that? Now we have this breaker. We've returned to it here. Waffling. Now you want to see it just roll over and or return into that last up close candle there. So if we do pop back up into the New York session, is that New York session? Oh, that's midnight open. The midnight open candle. That would hit that breaker nicely for a run below these lows. So if we do work it up on the higher time frames, I agree for a short, but in the short term, we may see a run back up into this breaker, deeper retracement into this breaker here, or as high as the open for a continuation on the downside. What say you guys? Agree? Disagree? What do you think? Yeah, I took a $5 profit on the long. I wanted to break even this time because it was just too painful to be in. I was in ES, right? Yeah, I think I took a tiny little $5 hit. I think enough to pay for my commission. Oh, you taking off, Derek? Okay, buddy. Touch base in the PM session. Gonna run the sweeper or something exciting. The sweeper thing, that thing you plug in the wall, makes noise. A little noise maker. Wait a second. My wife's going for her massage today. Yeah, Bill. So good. Steal my car lately into the keys and
Seeing on the 5 second where I would enter 5940. 15940 for NASDAQ for short. What is it like at the 5 second? 5 seconds. Let's look at 5 seconds. Eek. Run out the highs. Well, this is more fun to watch than this will get you practicing. Run the lows. Lows. You were getting it 15,940? 15,940. So you were like so close, Derek. Or Lori. You're so close. You're like 1.5 away from your entry. Oh, man. Okay. That looks exciting on the 5 second chart, but we go bit of the 1 minute. Finally break the lows. Did you get in on that, Lori? It took the highs, yeah, and then displaced. Now, did you... you said you were looking for 15,940 and it's 15,38.5. You're just short of your display. Took out the highs. We get displacement. Boom. Run down. Come back inside. Now, I guess you could look at this and say, do we get short right here? Or do you wait for it to return back to these old lows? Oh, it did hit old lows right here. Now they're further run down. Okay, look for a return to these old highs here. Or up into here. %50 of this. All you need is a little pop up there, I suppose. Let's look at 50% of that on the 5 second chart. Would be right here. I'm going to leave that there and see what that does. $11.16. displacement. On the displacement, the return to, nice, right in here. I bet you that's where you would have got in. That looks like a lorry move right there. Right on 11/16/30. Now here's a fun thing. If you take this and do this, the leg that actually took out that high, oops, look at that, 4 rocked it all the way down to here. A 4-leg display, a 4-leg banger down off of that leg that took it out. So if that was your takeout and that was your entry right here, that took out the highs, that's the displacement leg, or the not displacement leg, that's the impulse leg that takes out the high. Then you get this displacement, return to the breaker, get short there, and aim for your 4 banger down here. And you would hit that nicely. And I suppose if I would have added another one on there, we probably would have got 5 out of that. Let's look at the settings. Let's go to here. Let's do 5. Okay. No, didn't quite get 5, but you did get 4. You would have got 4.5. Nice. Nice Hawkeye there. Lori, good work, buddy. Consolidation, break above. Breaker. Return to breaker. Sorry, your question, Adam, was what are your thoughts on the NASDAQ daily? NASDAQ daily. NASDAQ daily and weekly after it touched the weekly fair value gap. Weekly fair value gap. Price imbalance. Weekly fair value gap. Did we hit the threshold of that? We did. Consequent encroachment of that BISI. Now go to your daily and look for a BISI or a SIBI 50%. What's that there? That is nothing. That's an hourly, I think. What's that guy way over there? That's a long time ago. Let's go here. Make this a little bigger. Leave that on the daily. go to the hourly here. So 50% on the weekly, we saw the return to the 50% of the weekly fair value gap. We had a nice reaction off of that. And we are moving. The daily is no... We've run back up to mean threshold. This candle here got validated right here. This one we came back up into the mean threshold, or the bottom of this. The mean threshold was hit, rejected off of that. We're up in the rejection blocks on the daily. If you look at these daily candles, we hit the rejection block up here of that Monday candle. We had a really nasty pullback right now, so the potential is to run down to this rejection block here now, rejection to rejection. So I think if this was my objective for tomorrow or to the rest of today, I'd be looking for these lows. These were body lows right here. That's my thoughts anyway, Adam, for what it's worth. Which isn't a lot today, but look right there. Look at you, Lori. Calling it. $11.28 had an opportunity as well. Yeah, you did. Yeah, you did. Right there, displacement. Look at you. Lori's master class of trading right there. I missed that one as well. Would have been a 1 minute time frame entry. Lori said, oh yeah, I would have taken that right there. And then taken my children for a 5-star dinner. Yeah, consequent encroachment is very important, especially when you're looking at these BISIs and SIBIs, these fair value gaps. Take your create a fib tool in here. So when you pull your fib, create a fib tool that lets you divide into quarters. Like, so you can say, I can pull, then you go to your fib here, save it as a quarters, so it divides it into a quarter as a template, so that you always have access to it when you need it. That's my advice anyway. This is a classic consolidation, yet again, displacement back into order block breaker, and just away you go again. You see these really, really well, Lori. I'm glad you've got the eyes to see that. I like this because people come in here and they have a unique setup that their eyes are attuned to. And Lori, you've got that sucker dialed, man. Good for you. You get some hearts. Yay! I'm going to send some hearts right there. I'm sending hearts into the
in the box. Good work. We should actually get kind of excited about these consolidations, because then, you know, whenever there's a displacement to the upside or downside, there's an opportunity to get back in off of a breaker, the bottom half of a fair value gap, or the 50% of the fair value gap. I'm just thinking, I'm just spitballing here. What 50% of the consolidation might look like if we went to the highs, or where it started. Went to the highs. 50% of the consolidation's right there. Now, if we did this same kind of thing here, and we said, let's do a string projection from here. If we had downside, if this was the leg that broke the highs, and we have a downside projection right here to 4, we hit 3 right on, oh, pretty close. Downside objective would be somewhere around here. We get back to that low. And get short off of that. %50 puts us right on that money right there. So if we can get back to that low, you can get short there for our 4 banger price swing there. I think we're going to have to name your entry as the LS slide. The LS slide. I like that. Loriston just slides right in there. Takes a nice, he sees it in the LS slide. We might have a new name for you, Loriston. The Slider. That's your new nickname, Slider. I'm just dishing out nicknames like crazy here. Liquidity is going to be generated through the lunch period. I agree. Yeah. 20 minutes. Yeah, let's slide. The short you took earlier, was it on NASDAQ? Was it on NASDAQ or S&P? Well, S&P, you could have hit that perfectly on S&P anyway. NASDAQ, let's look at NASDAQ. Could you have got that on NASDAQ? Slider would have got that on NASDAQ, trust me. The 28. Right here. Yep, Slider would have got that for sure. Come back, nail that right there. Boom. That's where he would have been in. And then he's on the slide. He's on a free fall slide right there. Whenever you see your setup, Lori, you're just going to have to put in big bold letters, Slider! Big bold letters with exclamation marks. And then we can all pile on your your toboggan. I'd be like one of those Jamaican bobsled teams, man. You just catch that thing and woohoo! You're on the ride down. And I know you're not Jamaican, but the Trinidadian bobsled run right there. Yeah, so either one, NASDAQ or ES, would have given you the same setup. There's your displacement. You just ran out of high. With the displacement, come back, take that order block or breaker, and then catch that whole run right down right there. That's a beautiful slider right there. Right now, they're not going to give you this before they take these lows, unless they engineer equal lows here, then come back 50% and then take them out. Or this could be the 11. Yeah, you may see this pop down here and into lunch and then start coming back up and get ready to work this stuff here during lunch. Because we have that 11:45. We should see a little pop down in here into 12 o'clock and then start running back up. So consolidation, same kind of thing we're just looking at here. So we got a slider here, a slider and a riser. The balloon ride. If we catch a balloon ride here, if we get a consolidation, kind of like this, then we get a leg that takes out the highs. In this case, it'll take out the lows, and then we get a displacement, then we get a return to it, and then you look for these highs here. Then we get an LS riser. Consolidation leg. There's your 4-banger right there from that high. That would be to here. Consolidation. The leg that takes out the high. Not a 4-banger, but definitely a 2.5. Derek loves these 2.5ers. Right on the money. Looking at this consolidation right here. This leg takes out these little highs here before creating that impulse down. There's 2.5 again. Unless this is it here. I think you'd have to take it from the low. That's the repeating trade of the day, consolidation, displacement. You come back into 50% of that displacement is another way to enter this. So if we take this here from high to low on that displacement leg, 50% of the displacement leg, that first displacement there, 50% of that short. Impulse, displace, 50%, off to the races you go. Oh my goodness, this is what Derek and I shit, we gotta remember these rules. We got too many setups now. Displacement come back into 50% or a fair value gap. Hit it. I don't know why we didn't see that. Okay, so the next 15 minutes, we're looking for these lows to get taken out as we go into lunch, and that impulse leg to take out the highs or the lows here, we want to see a displacement leg back up again and get this all reversing. The same kind of thing that's been trading all freaking day is this consolidation, impulse up, take out the highs, and then that displacement leg, consolidation, Judas swing, impulse, displacement, 50% of the range. I bet you that's 50% of that range too. Oh, just short of 50% of that range, but inside the fair value gap, inside the breaker. Wow, it's been staring us in the face. Consolidate, displace, yeah. Okay, so now we're looking for that, we know what we're looking for lunch. It'd be a nasty thing. 50%. Run out the shorts. Then go all the way down here. Clean out the longs. Then pull back into the range. Shake these guys off here if you're going to be a smart money. We have equal highs, equal lows. Fair value gap above. We've made these consistent lower lows. We haven't really made an attack on the buy side liquidity yet. There's the fair value gap. There's 50%. Slider is back. You're still short, yeah. Got these equal lows. I like to see these lows get taken out now just before lunch. We just talked about this while you were gone, Lori. What would be kind of interesting is if they kind of took these shorts out, went back into the 50% of that range, which we've just hit. Obviously this equal low. Now drive all the way down and take out this guy's here. So I'd like to see a short here. I'm just demo balling this here. I don't see it, just come down here.
I don't know. I've lost that fair value gap now to the upside. This is not a breaker. That's not a breaker. These are mitigations. That's not a. This is the breaker here. So it's kind of a deep run into here. You want to see that hold? And you got that fair value gap inside that breaker for a short. %. 70% optimum trade entry. Yeah, that's one thing I got to do is keep going down to these lower time frames to get the confirmation entry. Otherwise, I'm just slamming in and off of the time frame I'm in. I like that idea of my stop loss is going up here. So if I'm wrong, I'm wrong. I don't want to see it revisit that. So this was the thing. Consolidation, displacement. Look for an entry back in here.
risking 137 to make 62. That's just because I realized this displacement here. Consolidation. It's the very thing we called for over here when this was happening. But will they run down and take these lows out? Back into this order blocks. I did come back and revisit the top of it multiple times. It said, Darren, I've given you lots of opportunity to get out here. I'm stuck between saying, was that the opportunity to get out of this trade? Or do we gonna come back in here and just tag this one more time before taking out that high? This is where you get bashed around inside your, yeah. Good old consolidation smacker. Let's see, validate that candle right there. If it goes above that, I'm out. I'm out. Bracket. Oh no. The hell? Close position, son of a bitch. The hell was that? Yeah, that was the opportunity there. So now it'll take these lows out. High, low. So you want to see a displacement come back into here then. This is consolidation training right here, boy. How can you play in a consolidation? Well, this is a painful marking time, my friend. I don't like these equal lows here. Like you say, I think it might be building liquidity during lunch. Run down here, take that, then run back into that range. Impulse leg. Didn't come back into that. I don't see anything major on the 5-second chart either. This one here was a nice little displacement, but back into, here we go. Does that give you a chance to get in one more time? I'd like to see it hit here. All these equal lows here on the 5-second chart. Who trades on a 5-second chart? Slider does. Slider looks at this stuff all the time. Just shorter than the 5-second, but don't like the particular entry model. Did you get in off this little pop-up here? I wanted to see one more little pump up into this little bottom here. So I'm making equal lows, equal highs. Inside this little 5-second breaker. That would clean out all this here. If you're short, Lori, you got yourself, yep, right there, took out the high, mitigating a breaker. There you go. Yeah, I didn't see a high taken out here. It's just all relative equal ones here. But good for you, man. You got it. For a short into that breaker below. So we're into that breaker there now. This price here is the line in the sand for bullishness right now. If we take that out there with a close, then we're looking for these lows here. And that's the mean threshold of that order block breaker. That's the slider riser right there, man. Displacement, come back inside the consolidation, run back up. Now you got this little breaker right there. It's not a big fancy kind of run back up, but we've got here and here. Sorry, here and here. You're on NQ. Oh yeah, okay. Oh, the NQ one broke the high. God, yeah, I was on S&P. Got ya. So you went 5 seconds. Let's do 5 seconds on here. So that ran out that high. Broke below these lows, come back up into them here for run down. I guess I'm not bold enough to grab these ones here yet. Even though that was a display, that was the leg right from here up, took out these highs, broke down below the low, below this low, come back into it, right there. There's your 4-banger right there. Right to those lows. You got a good eye, Laurie. Really good eye, buddy. $15,890. Okay.
order block and the 15-minute come down, so we're between that order block and this threshold. On a 15-minute candle, the threshold here is also the old equal highs here for the riser, the Huddleston riser. So now you go down into the 5 second. This is what you do now, Laurie. You look for here, and then you look for a play off of that for a reversal back into seeking higher prices. We're into the 90 right now, so I look for a 5 second reversal here. Clean this out, displays to the upside. Yeah, I don't equal those. All right, so we're looking for a displacement. Yeah, I like your idea about getting down to 5 second. That'll stop me from trying to jump in too soon, looking for confirmation. So if I'm reading you correctly, we're looking for this consolidation to get a displacement out. I don't like the equal lows though. I want to see an equal low get taken out, come back. That would be the impulse leg to take that out. Then the displacement on the opposite side. Then either get back into 50% of that displacement or back to a breaker of some sort. I think that's what your model is. So that's the run down.
I've got 29 more minutes, and then well, actually more like 20 minutes. I'm still in my pajamas. My wife's actually doing work. Here I am in my pajamas still. That's what I'm looking for. Come on. Big run up now. So we have run down. That's the displacement leg. There we go. Come back into this breaker right here. And I shall buy that. Oh crap. Got in a little early again. Wanted to get in there. Alright, so now we've got this displacement leg for a 4 banger up. Or at least a 2.5. %50 of the displacement leg. Right there. Go long. That's 50% there. Back into our beloved consolidation again, even on a 5-second chart. But stop loss for me would be, if we're keeping it super tight, would be right here at this low. Catching a Lauriston rider here. He's still short though. I'm trying to look at this as a displacement above here. Return to 50% and back into order block. I want these to provide support now. If they start to give it up, all I've got is that fill there. I want that to stay open for this to be a positive run. But like Michael says, you can't suck your stop loss up too quick because it can run back and take you out here. Before running back up there. And that was the stop loss run. Now you can leave town. This is good practice. So far, that's falling into the narrative that Michael talks about in terms of if you have a, don't suck the stop loss up too tight too fast, because we can come back down, and that's the example of we just mentioned here. Come back, and if I would pull the stop loss to there, it runs back one more time into here and revisits that. I don't like all this consolidation here. Mind you, it's only a 5-second chart, so I'm not used to trading that, but this is actually one of my first trades on a 5-second chart. But I'm trying to do the Lauriston riser here, like we have a consolidation. We ran up, took those guys out, waiting for displacement. These are just a run on stops. We have a displacement here, or at least that's how I interpret that, as a displacement. Then you come back to 50% of that displacement leg, which was the second entry I took. And then that old high for continuation. Stop loss would go below the low there. It made sense to me, but we'll see how that works out. I have no live money on this at all. This is more of an experiment than and I really don't like the side to side motion. I want to see it start to leave, get some legs. As soon as I get 2, I'll take a portion off here and then move to break even. There we go. Partial close. 1. Move stop loss to in profit. Screw that noise. Let's make some money off of this baby. Come on, give me my 2.5, man. Dolfo, see you on. I hope you get something good on the PM session, my friend. I won't be here. I might not be here. I may be here. Hopefully I'm here. I got a meeting I got to go to. So if I see you then, great. If not, I wish you all the best of luck, my friend. I hope you nail it. And we'll see you again tomorrow for the non-farm payroll ending to the week. So I got a portion off there. This is why you pay the trader, man. Take some profits. I just did what you just taught me, my friend. I just did the Lauriston riser. Look at the slider and the riser. The LS riser. This was the balloon trade. He's in his hot air balloon right here. I just try to follow the rule you just kind of set up for me. That's all I did. So you can take credit for this one, not me, man. It's the Lauriston riser on the 5-second chart. Lauriston. Nice, bro. Went long. You went long as well? Off of this one right here, right? You went long there? You're out of here? Lauriston? Oh, yeah, okay. I'm good. That took me some profits. So consolidation, displacement, maybe that would have been the short. I don't know. No, I'm still short. Haven't hit my stop yet. Okay, so it's like consolidation, displacement, return back into consolidation, go short. We're back to this consolidation now. See, when you got those consolidations like that, I don't know, 5-second chart. I don't know what to do. Help me out, Lauriston. What's your magic? How do you manage that? To me, you're so tight right now. There's I hope you get your short now. I managed to catch that little bit of long for a two banger displacement, so it's a 1-to-1. Still haven't hit my stop yet. Good. I hope you nail this one, buddy. That's a smart money reversal, low risk sell, accumulation, distribution, second level, small level of distribution, and bam, unicorn, 5-second trade right there. Now we're giving you what you need there, Lauriston. That's what he wants. He's like, I knew this was coming. I saw this coming a long time ago. All right, so displacement, 1 minute, order block, come back. Now you can get short. See, 30-second chart. Return to that guy there. A little overzealous on the button again, Darren. That's the candle you want to get short on. We have a displacement. We had a body below that low. We come back, tag the edge of it. You start to close out trades when you see the consolidation. So we're looking for this low here to get taken out. And more downside. Send the love. Send in the love. Lauriston, good work, buddy. Yeah, I clipped those beans a little too tight. I think I should have definitely waited for this order block here. Or fair value gap. Inside that 15-minute could hit the high. What's the 5-second doing here? Consolidating again. Back to these old lows. Order block. Top of the 15-minute fair value gap. Malaysia, Lee. Lee, how's it going, buddy? Welcome, welcome. You're welcome anytime, my friend. Sign up, subscribe, catch us live. Lee, Techman. It's my pleasure, my friend, my pleasure. Another model I use, I would go short with the run above the consolidation after displacement. Oh, I see what you're saying. Like if it runs up here now, you'll take that short. Now that we've had a displacement below consolidation, we run above it now, you get that short. Also a return to equal lows, order block, top of the fair value gap. I like it. Look at you killing the model today. Teaching it, bringing it. Look at this. Lauriston's killing the model today. And I gotta go. I'm gonna shut this out. Thanks for that extra little bit of cash, Lauriston. Lee, buddy, pop in again tomorrow. We're gonna have some more fun. We have another displacement consolidation. So look for a return back to these equal lows right here for another five. This is we're trading the 5-second chart. So there's your return to this consolidation. So order block, you full fill of that now. That's a full fill. So is that 50% of that range? And I gotta go. My wife's home already and I'm still in my pajamas. Egads, what a life. What a life I lead. There's 50% right there. So we want to see that hold price. You don't want to see the candle give way. So that holds price, and then you want to see it hammer down from here. You don't want to see it run up back up above that. You're the man today, my friend. You're the man. Watch this hammer down from here. Just give her. Right off 50% of that. Oh, that was just magical. Another magical moment provided by the LS slider. Yeah. Order block. Oh no, it ran it. A magical moment stolen by the algo. Really? Is that 50% of that range? Yep, it's through that now. So my guess is we've got another run back the other way. We've cleared that 50% of that range out now with a bold candle. So chances are this is going to reverse on us and go back the other way. Internal range liquidity now, yep. That's interesting. So you see that 50% hold right there and then rip down to a discount range. So when you saw this is kind of interesting to see. So when we saw that 50% get hit, right, come on, right there. When we see that get hit, look at that, came back to 50%, almost 50% of that little range, and then it finally went up to clear it out. Oh, and it's running all the way back down. So just running out to... See, this is where it beats you up. This is where you can get your ass handed to you right now. Came down. Judas swing down. Take you out. Judas swing up. Like, what is that? Now it's going to continue down. Wow. 5-second. Can't even see that one. I can't even see how you would have read that one. Or how you could have understood. I saw this break the 50%. Thought, yeah, it's going to run up. But you know, it just ran the highs and that was it. Displacement. When do we get the displacement? Drop down. Continue on the downside. Wow. Yeah, that would have definitely taken me out if I was in that one. Anyway, good luck with the rest of your day. I am out of here. I hope you're still short, going short now, running internal range liquidity. Still short biased. All right, I'm out of here. Thanks again, Lauriston, for awesome little setups today, and I'll see you tomorrow. or this afternoon if I get done this message. Take care, guys. See ya. Be safe out there. Love each other. Man, it's been fun. This is what the world's about, man. Sharing, caring for each other. That's what it's about.